Welcome back to my YouTube channel. And before you continue watching this video, please subscribe to my channel. Again, I'll also request you to give the video a like so that the video can be watched by many people. So today I'll do a question on taxable the income. Yeah, I'll do a question on taxable incomes. I'll do a question on taxation, which is a specialization area in business data analytics. So I'll read the question. Ezekiel Kemboi is an employee of Sabuk Limited. The following information relate to his income for the year ended 31st December 2021. Number one, his basic salary was shillings 515,000 per month. Then in bracket, there was a payee of shillings 154,600 per month. Number two, he was provided with a company house with electricity, water, and telephone. Number three, during the year, the employer paid shilling 60,000 for his life insurance policy. Number four, he was provided with a 2000cc saloon car, which had an initial cost of shillings 2,600,000. Number five, during the year, the company settled his bills as follows. We have electricity, 28,000, water, 12,000, telephone, 32,000. Number six, during the year, he was reimbursed shillings 180,000 spent on medical bills. The company has a medical cover for all staff. The number seven, his employer contributes 3%. Sorry, let's continue. Number six, they're saying during the year, he was reimbursed shillings 180,000 spent on medical bills. The company has a medical cover for all staff. Yeah, number seven, his employer contributes 3% of his basic salary to a pension scheme while he contributes an equal amount. Number eight, he spent shillings 20,000 in December 2021 for entertaining the company's customers, which was fully reimbursed by the company. Yes, that was entertainment. Number nine, he received shillings 350,000 as an annual bonus, which is usually payable to all employees in December each year. Number 10, he received an overtime allowance of shillings 40,000 in the month of December 2021. So required Roman 1, compute the total taxable income for Ezekiel Kemboi for the year ended 31st December 2021. And that's 10 marks. Number 2, determine the tax payable, if any, from the income computed in C Roman 1 above. That's 2 marks. Yeah, so we have the year of income 2021, that you assume the following rates of tax apply through the year of income 2021. We have the monthly taxable pay, and we have the annual taxable pay. The rates are here 10%, 25%, and excess is 30%. Yeah, so there was information which was missing. We have the rates for the motor vehicle, the rates, there's a standard rate. So you will get it in your exams. You'll have that standard rate for motor vehicle. So it was not included in this question. But when we get there, I'll show you how to work it out. So I'll go straight to the question, and I'll start with the tax. So this is what I will do. I will do my workings here. Let me see if I think this side will be okay. So just write Ezekiel Kemboi. It is for which year? Ezekiel Kemboi. taxable income for the year ended. So just write taxable income. Taxable income. Sorry. For the year ended 31st December 2021. Yeah, so I'll create the bottom border as usual. So I just create a bottom border. Then I'll just highlight this so that I can center it and merge. Yeah, so I've merged that, then I'll bold it. I'll do the same to this item, taxable income. I'll merge and center. Then I bold. I'll do the same for the year ended. And I'll merge and center. I'll do the same for the date. You bold it. Yeah, so I think I'll just use the rates in thousands the way they are. Yeah, so I won't use the shillings in thousands. So I just retain the values the way they are. So I'll start with the basic salary. Yes, start with the item 1 is basic salary was shillings 515,000 per month. Yeah, so we calculate the annual taxable income. So if per month it was 515,000, sorry. So I'll say equals to 515,000. Then I'll multiply by 12. Yeah, because a year has 12 months. So I'll enter. So let me just say, okay. So when I enter, that will be the basic salary. And recall that we have the pay to be 154,600 per month. So I'll work with this pay later. Yeah, when I'm doing the actual tax payable. Yeah, so I'll go to the next item, number 2. It was provided with a company house with electricity, water, and telephone. That's okay. Then during the year, the employer paid shilling 60,000 for his life insurance policy. Yeah, so that's insurance paid. That's the insurance premium paid on behalf of employee by the employer. So it's taxable. Yeah, it's taxable. So I'll just say insurance. And just write insurance. Yeah, it's a premium. So it was paid by the employer on behalf of the employee. So it's taxable. Yeah, that's a taxable income. Then we go to the next item, number 4. It was provided with a 2000cc saloon car, which had an initial cost of shillings 2.6 million. So this is what we always do. That's motor vehicle benefit. So I just write motor vehicle benefit. Vehicle benefit. Yeah, so the motor vehicle benefit will compare the CC rating as per the rates given by KRA and the 2% per month of the cost of the motor vehicle. So I'll compare the two and we take the highest between the two. So for the CC rating, for 2000cc, it's prescribed as the benefit is supposed to be how much? It's 86,400 per year. So I just write it here, 86. Yeah, so I said you compare the two between the CC rating, the rates which you are given. This rate will be given in a schedule. Yeah, so you'll compare it because this was 2000cc, it's 86,400. So I'll compare it with the 2% per month of the cost. Yeah, so I'll take the 2%. So the next will be 2%. Yeah, so it has an initial cost of 2.6 million. So I'll compare the two. Yeah, compare the two. So I'll just say equals to, then I multiply by 2.6 million. Enter. Yeah, so that's what I get per month, because they're saying that you compare 2% per month of the cost. Yeah, so whichever is higher. So it means that 86,400 is higher. So the motor vehicle benefit will be 86,400. Yeah. What is given, what is prescribed on the schedule. Yeah, that schedule I said it was not here, but it will be provided in your exams. So I'll go to the next item. The number 5, during the year, the company settled its bills as follows. So we have electricity. Yeah, so when electricity is taxable, when your bill is being settled, then it's taxable. So I'll pick, let me see if I can pick the 28. No, it's not picking, so I just write it, 28,000. Yeah, that's taxable. Then we have water. It's 12,000. Then we have telephone. These are always telephone bills. So telephone, it's always 30% of the bill. Yeah, of the bill. So it's 30% of the bill. So I'll just say equals to 30%. Yeah, you only tax 30%. Yeah, you don't tax the whole amount. So it's 30% of 32,000. 2,000. Yeah, we'll have 9,600. That's okay. Number 6, during the year, he was reimbursed shillings 180,000 spent on medical bills. The company has a medical cover for all staff. So this is what you are supposed to do. This is what you are supposed to understand. You only tax a medical benefit that is discriminatory. Yeah. So if you are told here that the company only cover staff at higher cadre or at a given rate, then it's discriminatory. Then we are going to tax this. But because it's non-discriminatory, we don't tax it. So just come here and write medical just write medical benefit. Then you just say in bracket non-discriminatory. Yeah, because it covers everyone. Yeah, then you just come, let me extend the cell. Let me extend the size of this cell. Yeah, there. Yeah, then you just come here and say 0. Yeah, because you don't, if it is a medical cover that is not discriminatory, then you don't tax it. So just put the amount here 0. You'll get 1 mark for this. Yeah, you'll get 1 mark for this. Yeah, you have to include that. You don't avoid it. If it was discriminatory, then we will have taxed the 180,000. Yeah, so I'll go to number 7. His employer contributes 3% of his basic salary to a pension scheme, while he contributes an equal amount. So contribution to pension scheme by an employer is not taxable. Is not taxable. Yeah. When an employer contributes to a pension scheme, then it's not taxable. But your own contribution, because you are told that while he contributes an equal amount, so his own contribution will less it, because those are allowable expenses. So we'll less it under contribution. So here you just come and say employer contribution pension. And then you just say 0 because it's non-taxable. Yeah, you don't tax what an employer contribute to a pension scheme. Yeah, you don't tax it under employment income. Yeah, so I'll go to another additional information. I said we'll come back to additional information number 7 when we get to contributions. Yeah, so I'll go to number 8. You spent yeah, I'm just checking if everything, if the values are Marvin, they're actually for the 12 months. So I was just checking the bills and I can realize that during the year. Yeah, everything here is during the year so that I don't mess up. Yeah. So I'll go to additional information number 8 and they say he spent shillings 20,000 in December 2021 for entertaining the company's customers, which was fully reimbursed by the company. You can see he entertained the company customers. So it means that this, what was reimbursed was his own money. He spent 20,000. If he spent 20,000 on his own entertainment, then we'll tax it. But because it was an entertainment to company customers, which was reimbursed, it means that he uses money. So that's not an employment income. So we can't tax it because that was not part of his employment income, because that entertainment was not for his personal entertainment. It was for the business. So we won't include that as part of the employment income. So we won't tax it. So you can just write, yeah, entertainment allowance for customers, yeah, for the company customers. So that's not an employment income, so you don't tax it. So just put 0. Yeah, then I'll go to the next one. He received shillings 350,000 as an annual bonus, which is usually payable to all employees in December each year. Yeah, so this bonus, yeah, so bonus is taxable. Yeah, so you tax the bonus. So it was 350,000. So you go to the next item. He received an overtime allowance of shillings 40,000 in the month of December 2021. Yeah, so he received a bonus. So this bonus was only limited to December. Yeah, it was not for the all from January to December. So we just say overtime allowance. Yeah, so it's taxable. It was 40,000. Yeah, so I think those are the only employment income. So this is what I'm going to do. I'll now check on the housing benefit. So I just write an housing benefit because it was being housed by the company. So I'll check the housing benefit. Yeah, so the housing benefit is always 15% of the employment income. You compare with the market rental value. Whichever is higher, you pick it. Yeah, the housing benefit is 15% of the employment income. Then you compare that 15% of the employment income with the market rental value. In this question, we are not given the market rental value. Yeah, there was no market rental value. We were not given. Yeah, I don't see it anywhere. We were not given the market rental value. So we'll go with the 15% of employment income. Then you less the own contribution. So if you are told that maybe he contributes maybe 20,000 for rent, then you have to less it so that you get the total housing benefit. But in this case, there's also no own contribution when it comes to rent. So we just take the 15% because, yeah, we just take the 15% of the total employment income. So employment income is all what I've worked on. Yeah, so it's all this. So just come here and sum, just say equals to sum, or just say 15%, let me say equals to 15% times the sum. Yeah, this, you make your work easier. You make your work easier. Sum of all this. Yeah, then you close the bracket, then you enter here. So when you enter, your housing benefit will be 101, yeah, 1,014,900. Yeah, so that's the housing benefits. So when you are done with the housing benefits, now you go to the contributions. So I just write here contributions. So I just bold it so that you can see it clear, and I'll just underline it. I'll underline, I'll clear the bottom border. Yeah, so contribution, there was a contribution to pension. So I just write pension. Yeah, because that was the only contribution. There was no mortgage in this question, or an OSP. So I'll just go to pension. And in pension, you look at the set limit. The set limit per year for the pension is always 240,000. So I'll just write it here. So pension, yeah, so it's pension. So I just write set limit instead of repeating pension. The set limit per year is 240,000. Yeah, so we look at the actual. Yeah, so what was the actual pension that was contributed? You compare the two and you pick the lowest. Yeah, in this case now, we pick the lowest. So let me see the actual. So the actual, we are told, and additional information number 7, is employer contributes 3% of his basic salary to a pension scheme. So I just pick the basic salary for the year, which is this, and I'll multiply by 3%. Yeah. And I will pick the values which is lower. Sorry, times 3%. Yeah, so I'll have, this is 185,400 and the set limit is 240,000. And I said that you pick the lowest of the two for contribution. So I'll pick the lowest, and the lowest in this case will be the actual, which is set at 185,400. So I just come here and say equals to, and I start with a negative sign because I want the contribution to be negative. So I just pick this and I enter. Yeah, was there any other adjustment? No, there was no any other adjustment. So there was only pension. There was no mortgage. There was no HOSP, which is also called as HOSP. Yeah, so I think with that now, we can be able to get the taxable income. Yeah, the total taxable income for Kemboi. So I just come here and say, yeah, just write total taxable income. Yeah. So the total taxable income will just be the difference between this. So this is what I will do. I'll sum all this. Yeah, I'll sum all this all through. Yeah, so I'll sum because already the contribution is negative. So I'll just sum everything from basic salary all the way, yeah, to pension. Okay. Sum this. I don't know why it's giving me a negative. So this is what I will do. Let me sum this up to housing benefit. Then let me shift and say plus. Now plus the pension. Yeah, so it will give me this value. So the total taxable income will be 759,550. So I just bold it so that you can see it clearly on your side. Yeah, so after that, that's now we have answered part Roman 1 of the question. Compute the total taxable income for Ezekiel, the boy for the year ended. So this is the total taxable income. Yeah, this is the total taxable income. So I'll go to part 2, which now they're saying determine the tax payable, if any, from the income computed in C1 above. Yeah, so I'll come to taxable pay. So tax, yeah, let me just say tax payable. Yeah, so tax payable, this is now how we calculate it. So we lose the rates which are given. So we start with the first. Yeah, so I'll just say first. Yeah, so the first, so I'll use the annual taxable rates. So I'll start with the first. The first is 288,000. You can see the amount here is 7.5 million. Yeah, so it's even more than the 288. So I'll start with the first 288. So I'll say first, then I write 288,000. Sorry, I'm supposed to say equals to 288,000. Then I'll multiply by 10%. The rate is 10%. The rate is here. So just multiply by 10%. Yeah, so I'll have 28,800. So the next one is 388. Yeah, so I'm taking 388,000 But I'll subtract the 288,000, which already has gone. Yeah. So next, just say next. Yeah. So what I'm supposed to tax here is 388,000. Minus the 288,000. Yeah. Yeah, you have to be very keen with that, because when you tax 388, then you are going to tax it twice. Minus the 288, which is 100,000. It's always 100,000. So you can just pick it on your side as 100,000 instead of taking your time. But I'm doing this because I want you to understand. Yeah, that's why I'm taking 388 minus 288. But next is always 100,000 if you are given this, the rates to be this way. Yeah, so I'll multiply that now with 25%, because now for next, the rate was 25%. So I just say 25%. Yeah, and I'll get that. Now excess. Now I'll go to the amount. Just say equals to, then the amount, the total taxable was this. But I'll subtract. Now, I'll subtract the 388,000, because I've calculated when you take 288,000, the first one, plus 100,000, that's 388. So I'll subtract the 388,000. Then now I'll multiply by 30%. Multiply that by 30%, and I'll enter. Yeah, so with that, now I'll have to sum this. Yeah, so once I sum that, now I'll have to deduct. I'll have to less pay. There was pay, so I'll less pay. Yeah, so I'll say pay. So pay for the whole year. Yeah, so I'll pick 154,600, because that was the pay. So I'll just say equals to 154. Let me put a bracket. Yeah, so I'll put a negative sign because I want my pay to be negative. Yeah, because I'm deducting it. So I'll take 154,600. Then I multiply by 12. Yeah. Let me assume that there was yeah, there was pay, and let me see whether there was also tax. Yeah. So I'll multiply by that. Then I'll enter. Yeah, so I'll have, yeah, negative 1.855,200. That's pay. Then there was also personal relief, which is always standard. So the personal relief, so just write it, personal relief. So the personal relief, yeah, it's always 28,800 for the whole year. 28,800 for the whole year. So I'll also put it in negative 28,800 for the whole year. Yeah, so that's the personal relief. So the tax payable now will be, yeah, what we pay to the Kenya Revenue Authority will be now the sum of all these three. So I'll just sum these two. Sum. Yeah, so Kemboy actually paid, sorry. Yeah, Kemboy actually paid, yeah, it is 332,050 to KRA. So the actual tax payable was this. So let me just bold it. Yeah, so Kemboy paid this to KRA. So that's bringing us to the end of this lesson. And please subscribe to my channel so that when I upload any video of this nature, you'll be the first to be notified. Thank you so much, and I wish you all the best in your exams. Thank you.